Is Bitcoin an overhyped bubble destined to fail? Well, that's what we're going to talk about today because a lot of critics say it is. Now, even if you're a huge Bitcoin bull, this video is still important to watch because it pays to test your assumptions in the market. You got to look at the other side just in case you're missing something. Because if you are, then obviously you want to correct your position so that you can continue to make money, because that's the point of this, right? So in this video, we're going to go over the bear case for Bitcoin and then, of course, what you should do with your investments and money. Now, one person's opinion who I love hearing about Bitcoin is Ray Dalio. He runs one of the biggest and most successful hedge funds called Bridgewater. Now, his views on Bitcoin are backed by the best global macro historical research in the world. So he has a very balanced view. And you could see recently at Bridgewater, his whole team published their thoughts on Bitcoin because he's been in the news a lot talking about Bitcoin and things have been misconstrued. So he wanted to set the record straight. So we're going to jump into his research because, like I said, he gives the most balanced view. So you could really see why people think there is a strong bear case for Bitcoin. First off, he says he thinks Bitcoin is awesome. So before anyone can come at him with the pitchforks like they already have, he just wants to make that clear. To have invented a new type of money via a system that is programmed into a computer and that has worked for around 10 years now, and which is rapidly gaining popularity as both a type of money and a storehold of wealth, is an amazing accomplishment. And yes, I think there is no denying that Bitcoin is absolutely incredible. And the blockchain, everything. Awesome. And he's saying all this right before he hits you with the but. He continues on to say that they've done a great job of moving Bitcoin into an alternative gold-like asset. And there aren't many gold-like assets during this time when there's a rising need for them because of all the debt in the world and all these governments just printing money like crazy. So there's a growing need for things like Bitcoin that are a storehold of wealth and that are in limited supply. And there's also a need for assets that can be privately held. Now, whether Bitcoin fully meets that criteria, well, that's what we're going to talk about in a second. Dalio says that it seems that Bitcoin has succeeded in crossing the line from being a highly speculative idea that could well not be around in short order to probably being around and probably having some value in the future. Oh, so positive. So he's saying no, digital currencies like Bitcoin are not a fad. The community has succeeded in making it a real thing. Now, since the supply of Bitcoin is known, one has to estimate the demand to estimate its price. So now what he's talking about here is that there are a finite number of Bitcoins, right? That's the whole point. You can't just keep printing them like regular money. So the supply is kind of set. But even though that supply is set, he wants to clarify, because even though Bitcoin is limited in supply, other digital currencies can sprout up. So digital currencies in general are not limited in supply. There are going to be more that come that compete with Bitcoin. And that competition will play a role in determining the price of Bitcoin and those other cryptocurrencies. And since the way Bitcoin works is that it's fixed and it won't be able to evolve, he assumes that a better alternative will be invented and eventually pass it by. And that is kind of a risk if you're trying to invest all in Bitcoin. So when you look at the limited supply argument that a lot of Bitcoin bulls use, you got to remember that a limited supply isn't everything. Think back to BlackBerries. They were in limited supply and they still became worthless because competitors were just better. So he's basically saying you can't look at Bitcoin as the be-all end-all because there will be other cryptocurrencies that compete and they might take over. So that right there is one risk. Next, Dalio talks about the technology and how it hasn't been hacked yet, which is great, but he also says that cyber offense is much more powerful than cyber defense right now. And the risk of getting hacked, that cyber risk, is something he can't ignore. That's another danger of this. So when the Department of Defense can't protect its systems from being hacked, if you heard about that in the news, you can't be totally comfortable that digital assets won't be hacked. And that's one of the benefits of something like gold. If you hold it, unless someone comes and takes it from you with a gun. And that's compared to any of these cyber currencies or even, our current economy when it's all digitized. Dalio thinks they're going to be shown more vulnerable to disruption and or to cyber blackmail than is now recognized. Meaning he thinks something is coming in the future which is going to shake our foundational system. How everything is just numbers now going back and forth over the internet. There's going to be a big hack in the future. Now, of course, Bitcoin can be held offline via cold storage, but Dalio says that he understands it as very difficult to do and very few people actually do it. So by and large, his understanding is that Bitcoin, being digital and connected, is not protected against cyber risks. He looks forward to that being fixed hopefully in the future, but right now, no. Next, you got to ask, because Bitcoin is digital, how private is it really? And will the government even allow it? And regarding privacy, it looks like Bitcoin will unlikely be as private as some people think it will, because everything's on a blockchain ledger, right? So the government and or hackers could look at that at any time they wanted. And if the government want to get rid of Bitcoin, then most of the people using it wouldn't be able to use it anymore and the demand would plunge. So that would destroy the price. And we'll talk about this more in a minute here, but there's a lot of arguments that says it doesn't matter what the government wants to do because the people want Bitcoin and its creators created by the people, you don't need these institutions. Well, that's not exactly how it's worked out in history. But again, we'll talk about that more in detail in a few minutes. What Dalio says is the more successful that Bitcoin becomes, the more likely this possibility is of the government trying to shut it down. And why is that? Well, obviously because the government loves power, and one of the biggest powers you could have is control over a currency, where you could print it and do what you want with it. Which, if Bitcoin is the main thing, then they lose that power, right? So it's hard for Dalio to imagine that they would allow Bitcoin or even gold to be an obviously better choice than the money and credit that they are producing. Again, this money, credit, printing, this all financial engineering, really, when it comes down to it. There's a lot of power in that, a lot of freedom and flexibility. He suspects that Bitcoin's biggest risk is being successful, because if it's successful, the government will try to kill it, and they have a lot of power to succeed in doing that. So those are Dalio's general views on Bitcoin. But beyond that, he has a whole team of the smartest people in the world working at his fund, researching this stuff, running analysis on it. So now he has his team and his research take over. And this part is a look at the path for Bitcoin if it is to become an alternative storehold of wealth. Because this is the big question here. Can it be a real storehold of wealth with what it is? You'll see there's some benefits, but also some drawbacks. So their research conclusion was that for now, we do not see Bitcoin as a viable storehold of wealth. And that's mainly due to a high degree of volatility, regulatory uncertainty, and operational constraints. Really, they see it like buying an option on potential digital gold. It has a wide cone of outcomes, with one path leading to it becoming a true intrinsically accepted alternative storehold of wealth. So what they're saying is that because of the way Bitcoin is structured, there's a ton of uncertainty about whether it will actually survive. That's what they mean by a wide cone of probabilistic outcomes. This could happen, or this can happen. So if you're betting on Bitcoin right now, going all in, then you're betting on one particular situation happening, which can happen, but there's not a huge probability of it either. Now, of course, Bitcoin does have some of the characteristics to make it a storehold of wealth. Similar to gold, it can't be devalued by a central bank printing, which we talked about, and the total supply is limited. It's also easily portable and exchangeable globally, especially for individuals. And we'll see more about that in a second. And it also has the potential to provide diversification, though this is more theoretical than realized at this point. So at the same time, they have some benefits to become a good storehold of wealth. They also have those drawbacks. One being that it's extremely volatile. The future purchasing power of Bitcoin remains fundamentally speculative, way more volatile compared to other things such as gold, real estate, or fiat currencies. Bitcoin also has a lot of meaningful regulatory tail risks, and that's what we were talking about with the government. And then the current level of liquidity in Bitcoin is not high enough for real investors like institutions. So let's dive into these points a little further. So the first thing we know about Bitcoin, a benefit, is that similar to gold, it offers a stable and limited issuance that cannot be devalued by central bank printing. So Bitcoin has a hard-coded total supply of 21 million Bitcoins, and that issuance rate automatically halves every few years. You can see right here, it kind of gives you an example of gold, the blue line, versus Bitcoin, the red line. So 90% of the total Bitcoin supply, which is 21 million coins, has already been mined. And the mining rate will continue to slow, just like it has in the beginning. You can see it's dropped off a lot because most of the Bitcoins are mined already. And it'll slow to the point that that total will actually never be reached. So this is a benefit, right? A finite supply, so it can't be devalued. Another thing going for Bitcoin is that even though it doesn't pay a yield, it doesn't actually matter because yields on other assets have collapsed. And that you can see right here. Look at the US real yield. It's just going negative. And the percent of global debt yielding below 1% continues to climb. Meaning you put your money in the bank, you aren't getting a return anymore. You buy bonds, you aren't getting a return anymore. Interest rates are so low that none of these assets are doing anything for anyone, which makes Bitcoin more attractive even though it doesn't have any yield, doesn't have an interest rate that you get paid on. Doesn't matter. Another benefit of Bitcoin is that it is accessible and easily portable, which is important for a storehold of wealth. If you can't actually move that wealth around and you can't use it, then what's the point? So compared to some other traditional storeholds of wealth, such as gold, art, and real estate, Bitcoin is much more easily exchangeable. And actually, given its digital nature, Bitcoin might be the most portable storehold of wealth, much more so than physical cash even. And you can see this chart right here of the countries with Bitcoin ATMs. And this is important because you need to be able to use it everywhere, right? And now over 80 countries have at least one Bitcoin ATM. So this is becoming a bigger and bigger thing, which is once again important because you got to be able to move that wealth. Now, one thing that remains unclear is whether Bitcoin will provide diversification when portfolios need it the most. Because it's only been in existence for a decade, there's not enough evidence to credibly conclude that Bitcoin, like gold, will reliably offer portfolio diversification in the future. Because what's one of the big reasons that people buy gold and art and real estate is to diversify their portfolio, which includes things like stocks. So if you have all these different asset classes, you don't want them to correlate correlated, you don't want them moving together. So in case one asset class is dropping, the other one is going up or at least staying stable. That's the type of diversification that you want, and it's actually something that Bridgewater specializes in. You can see here a chart of the rolling correlation of Bitcoin to gold and inflation expectations. So far, they have not been consistent, so it's kind of hard to tell how Bitcoin will work in a portfolio. Here's some more charts kind of comparing them. Here you see gold has reliably supported returns when portfolios were otherwise suffering drawdowns. And when you throw Bitcoin into the mix, it's hard to conclude whether it will do the same thing. So far, the diversification that it offers seems more theoretical than realized because it hasn't happened yet. Now, as we said in the beginning, Bitcoin institutional acceptance will be slowed by volatility, regulatory uncertainty, and still immature infrastructure. So if we attack this volatility point first, the fundamental purpose of a storehold of wealth is to preserve or increase one's purchasing power over time. That's the whole point of it, right? That's why you diversify, so that your money stays your money, it doesn't get inflated away, and you don't lose it. But Bitcoin seems more like an option because it's so highly volatile and speculative. Compared to other established stores of value, Bitcoin isn't widely used as a savings vehicle or reserve asset. It doesn't have any meaningful participation by governments or the largest global institutional allocators. Another way to measure whether it's a good storehold of wealth or just speculative is to look at turnover. And Bitcoin's high turnover compared to gold could reflect its relatively more speculative nature. And what they're saying here is that you can see the turnover of Bitcoin versus gold. Bitcoin is the blue bar, and it is getting traded like crazy, especially compared to gold, which it's supposed to be digital gold, right? And when you see data like this makes it look more speculative instead of a storehold of wealth. Because again, if it's a storehold of wealth, you're holding on to it. You're not exactly trading it so much. They even say here that the speculative interest in Bitcoin in the recent months has increasingly exhibited some classic dynamics of an asset bubble. The strong discounting of future rapid price appreciation, the broad bullish sentiment, and rising leverage are all indications of bubble risk. But of course, bubbles can last much longer than you think they could. So once again, it's looking more like a speculative bubble than that storehold of wealth, which is what it's supposed to be, or what they're trying to make it into. Now, one of the biggest things that they think is going to hurt Bitcoin is regulation. Because you got people like the European Central Bank president saying it's a highly speculative asset, which has conducted some funny business and some interesting and totally reprehensible money laundering activity. There has to be regulations. It's a matter that needs to be agreed at a global level, because if there is an escape, that escape will be used. Basically, they're saying that they don't like all the illicit activity going on with Bitcoin. Janet Yellen, the new US Treasury Secretary, kind of said the same thing. During her confirmation hearing, she said cryptocurrencies are a particular concern when it comes to terrorism financing. We really need to examine the ways in which we can curtail their use and make sure that money laundering doesn't occur through those channels. Now, they're saying that there are two main regulatory paths that they think are most likely. One is clamping down on Bitcoin and cryptocurrency usage for fear it could undermine traditional fiat currencies, and that would cut off further development of this asset, Bitcoin. Or there could be a regulatory environment that actually creates more trust in something like Bitcoin, and the asset becomes a longer term hold, but it could lead to heightened volatility along the way. But both paths, in their view, suggest that the Bitcoin roller coaster is just getting started. It's going to continue for some time. Now, the things that these central bankers are saying, they might just be an excuse. Really, what the government is going to try and do is anything in their power with any reasoning just to get rid of Bitcoin so that they can keep their power. And again, like I said, a lot of power comes from controlling the currency. No one ever wants to give up their power, and that is not good for Bitcoin. Bridgewater talks about it again here. They say their main concern is if there's some future proliferation of central bank digital currencies to serve as officially sanctioned digital storeholds of wealth. Governments may prefer to limit the competition posed by Bitcoin as a non-governmental alternative. So they may create their own virtual currencies and say, hey, don't use Bitcoin anymore, you don't need it. And that might be a nail in the coffin for it. So overall then, how do we look at Bitcoin? What should we think about it? And then what do you do with your money? Well, Dalio sums it up right here. He says that Bitcoin looks like a long duration option on a highly unknown future that I could put an amount of money in that I wouldn't mind losing about 80% of. So what he's saying is that this is not a sure bet. If you're going to invest in it, expect to lose, because the potential outcomes of what could happen with Bitcoin are not certain. There's a lot of different ones. That cone of probabilities is large. So you still got to be careful, which is why me personally, I'm putting 5% of my net worth into cryptocurrencies. I'm probably splitting it amongst Bitcoin and Ethereum. And it's 5% because I do kind of believe things can go south fast, and I don't mind losing that 5% if I have to. Hopefully it grows pretty well, but who knows? And the reason we don't know is because of all the reasons listed here by Bridgewater. These are legitimate reasons. But to protect yourself when you're investing in Bitcoin or really any asset, including the stock market, you need to be doing one thing in particular. It's honestly honestly the most important thing that you could do for your money, your investments, and your financial future. I made a whole video about it right here. So definitely click on that video to see what you need to be doing with your investments, because I promise you it is very important. So click here and I will see you in that video.